We're going to start right out of the gate here today talking about swing trading. And I'm sure there's a lot of folks in the room who have a great interest, in swing trading. This is going to be a very different approach, but one that's good, one that you should learn a lot about because we've seen a tremendous amount of value in it over the last several years. So just to give you a little bit of background on what I'm going to be presenting, Dr. Bart DeLito, who's again the founder of VectorVest, came to me almost 4 years ago to the day and said, Steve, we've got some incredibly powerful tools in VectorVest, one that we've really not leveraged as well as we should have, called the VectorVest Derby. And we know how powerful it is. Even a lot of our subscribers know how powerful it is, but we need to create a systematic approach to leveraging that power so that everyone can truly take advantage of just how powerful the tool really is. And so that's what you're going to see. You're going to see the byproduct of that conversation. It was about a month later I had developed a technique using that tool to make a lot of money in the stock market. And what you're going to see here on the next slide is going to be just a little snapshot of kind of where we stand on the most recent campaigns. I would like to just go ahead and make quick mention and noteworthy mention that we've seen 60% annualized rates of returns on this technique over the last 3 years, trading in a real money environment, trading with executions through a brokerage. So what you're going to be looking at here is not going to be back testing. It's not going to be some situation where we've gone back and maximized and fine-tuned and just replicated some kind of performance that you could have done. This is actual performance that has been done. And of course, there's a huge difference, between those two things. We did paper trade it for about 6 months, once I developed the technique, just to build some confidence, see how it did. And that was kind of a paper trading environment that still cleared through the brokerages. A lot of brokerages allow you to paper trade. But once we had enough evidence where we felt like, we just need to go ahead and turn this thing loose, that's what we did. And we put it right through. We started out with Interactive Brokers, I believe. Now you're going to see that we're in Ally. And we've been having really good success with Ally in terms of executions, getting into the stocks that we want to get into, all those kinds of things. But on the screen, it's an important graphic because this has many, many interesting facets to that graphic if you haven't already thought about it. And so I'm going to kind of show you here with my cursor. One thing is, one of our overarching goals with this technique is to try to make money month after month after month after month. Now, it's an impossible goal, I suppose, but it's a good one to have from the aspect, boy, I tell you what, if you can make money 8 or 9 months out of every calendar year, you're going to do really well, And so I'm happy to report that's exactly been our experience. We're making money about 8 to 9 months out of every, the number's actually right in between, of every single calendar year. And we're getting that 60% return every calendar year, and on average. And so a lot of you might think, well, they probably just did really well off this COVID situation. That's not the case. It's been a system that's done really well no matter what year it's been. And so our hope then, of course, is that we continue to do just as well in the future. So back to the graphic, you'll notice that, as we get into 2020, remember the bottom fell out of the market late February of 2020. And you'll notice here on that graphic that there's a flat line that runs across. We follow a couple of things. One, market timing. And what that did was keep us out of harm's way. So we were in a cash position for the vast preponderance of that COVID collapse. Then you'll notice a huge jump in the equity curve of the portfolio, followed by subsequent jumps along the way up to where we are now. And that's because, market bottoms create the best opportunity for profit. That's where a lot of money is really made. And so you can see that big jump here as we got into April, and then we're just still clicking along. This snapshot was taken, you got 90.21% percent up there in the top right corner. This snapshot was taken earlier in the week. We currently stand at 94.7 or something like that. We'll see here in a minute. So it's gone up another 4% so far this week. You can see we are off the peaks. We were up about 102% at one point just about a month ago. Of course, the markets haven't done a whole lot over the course of the last month. The market's been, essentially building a wedge, and an ascending wedge at that, which typically leads to ensuing breakout to the upside again. And so here again, we should be very well positioned to take out that 102% over the coming weeks if that in fact turns out to be true. So super excited about it, and it's worth talking about, so that's what we're going to do. We're going to talk about how we do this. We're going to talk about how we get these kinds of results cleared through a brokerage, and you can do it too, and that's the big message. So what we're going to do is just kind of draw it out. And every system should be comprised of at least 3 main pillars, if you will, or could be cornerstones in the case of a triangle. All right, triangles would have a cornerstone at each corner there. And so one of the main cornerstones is going to be, when do I buy stocks? When do I start buying stocks? And then ultimately, what stocks am I going to buy? And then when am I going to sell those stocks so that I can lock profits in and keep that needle moving month after month after month? So what we're going to use in terms of when to buy, we're going to use and leverage a timing model in VectorVest called the primary wave. And it is dynamite. It really nails the major turns in the stock market, and on all the little bumps and wiggles in between, it helps us navigate those things beautifully. So we're only going to be buying stocks and holding them in a primary wave up environment. An average primary wave up signal is going to run you about 9 to 10 days on average over the course of time. Some can be just a couple of days, some can even be one day, and some can be, several weeks when you really get good market trend. But the average is going to run you about 9 to 10 days, okay? Then what we're going to do is we're going to leverage the Derby to find what we're calling a consistent Derby performer. This is going to be a scientific approach. One of the things that's maddening to a lot of investors and traders out there is, no matter what platform it seems you go to these days, there's all these choices and situations where, hey, this looks, this little gadget over here is giving you some stocks, that looks good. This scan over here is giving you some stocks, that looks good. Right on the home page, we got some stocks, that looks good. What do I do, right? And so we have a systematic way to decide exactly what 10 stocks we're going to buy. And the Derby is going to help us do that by finding the consistent performer. We'll explain more as we get there. Then we're going to have a 2-prong approach to our stop losses. So we're of course going to have stops on the individual stocks that we trade, and we're going to use a proprietary stop loss here at VectorVest called Profit Locker. You're going to get a chance to see that. I'm going to really try to show it to you really cleanly so that you understand it. It's different than anything else that's out there, and it's done us a lot of good. But we're also going to go to cash no matter how the stocks are performing. Even if one's up 20% or something, if we get a primary wave down, we take that profit off the table and go to cash. Because if the primary wave turns down, that means the market has turned down. And what's going to happen to those stocks if we hold them? They're going to turn down, okay? So we're always holding 10 stocks. However, we don't hold any stocks at all in a primary wave down situation, because that would lead to drawdowns in the portfolio. And we would not get near the performance that we've gotten by going to cash, okay? So that's high level 30,000 foot view of what we're doing. We're going to dig deeper now. We're going to break each of those pieces apart. And what's nice here is there's only 3 pieces to break apart. I've met a lot of guys over the years, and I've had guys show me like these pamphlets of, here's all my rules for everything I do. And I'm thinking to myself, oh my goodness, it's going to take you so much time trying to figure all that out. How are you ever going to do any trading? So it's super simple. And those three components are really all we need to address. The first one was when to buy, as you'll see on your slide here again. As I mentioned, we're going to use the primary wave up signal as our timing signal, not only to buy stocks, so we're going to buy on the initial primary wave up signal, and we're also going to hold stocks as long as it's up, okay? On the what to buy, this is where things are going to get a bit different. And so let's stick on the when to buy for now, because I want to show you the timing model and the essence of what it means when we say we're going to buy on the initial primary wave up signal and we're going to only do campaigns as long as it's up. Okay, so I'm going to go over to VectorVest here quick. And at the top, I'm going to go to timing. And from the timing tab, then of course I can go to what's called the market timing graph. And I got to be cognizant here. You know, a lot of people are not VectorVest subscribers that are in the room. Some of you are, of course. But this chart represents the stock market and the stock market's movement. Now, this is an intraday chart, in case some of you are wondering. That looks a little different than what I see on the S&P or something. This is an intraday chart. So if I come down to the bottom here, and we just look at, say, the last year. I'll take off, there's that wedge I was talking about, okay? Now, at the bottom, you have the ability to place on what's called these timing models, right? And I'm going to go to primary wave. And it's going to put a bunch of green arrows and red arrows on the chart. When a green arrow is signaled, we would look to buy stocks the following day if the markets follow through. And when I say follow through, it really doesn't matter what percentages or any of that, just that the markets are higher first few minutes of trading that following day. We would then launch the campaign. We would stay along that campaign, managing the stocks along the way, of course, with Profit Locker. We would stay along the campaign for the duration. So in this case, you can see there's about a couple of weeks of movement on the signal that I have selected. Right? So we would have been long, holding, and selling stocks that hit our stop, but replacing them with a new stock from the same strategy, from the same stock selection that we started the campaign with. So the methodology never changes during a campaign. It can change the very next campaign because the stock market might in fact be favoring a slightly different stock that month later. See what I mean? And so the derby, again, is going to be isolating the strategy that's the most consistent when any one of these green triangles is selected. We will then buy from that strategy, and the expectation is that you actually outperform the market. So even in situations like this one where the market kind of did a hard reversal, there have been many of those types of campaigns where we've actually made a decent amount of profit because we've been in the right stock selection methodology to cope, with that situation. And we've taken some lumps, there's no doubt, but again, we're looking at 60% annualized rates of return, so the methodology is held true. And so, when a red comes in, we go to cash, we sit out the rest of that down in the market, and then we get back in the day after a green triangle is signaled. So this is an end of day signal. We then look to take, whether it's opening a campaign or closing a campaign, we look to take action the following day on follow through. So if we get a down and the market doesn't follow through to the downside, we would in fact stay long until it does follow through to the downside. That's the only caveat, okay? And you can see here, the most recent signal was up on 3:30. So about a month, if you consider we waited for follow through the following day, which we got, okay? And so for the month of April, we're actually up about 9% in entirety for the month of April. If I go over to the equity curve here again, let me just go to the RoboTrader. We stopped out on the last campaign at 85.5, and now we're 94.7. So slightly better, about 9.25% for this current campaign and that last signal that you saw on the chart, okay? All right, cool. So with that, let's go back into the PowerPoint here quick, and let's keep moving. Now the question becomes, what am I going to buy? And that's really the hardest part for most folks. Getting accustomed to a timing model like that can be quite easy because, as you saw, I mean, it makes all the decisions for you. Here, we've got to eventually land on 10 stocks that we're going to buy, right? And that's the challenge. So this is really the magic of the system, if you will. So when we say consistent derby performer, there's a lot of words on the screen. I just want you to really pay attention to me. You know, what essentially we're going to be doing is we're going to be looking at two modes of analysis that take all of the strategies in Unisearch in VectorVest that we feel are the cream of the crop, which is still a couple hundred. Okay, and we're going to look back at the last 3 calendar months of data, and we're going to look for strategies that no matter how we slice that data are consistent moneymakers. They've done the best over the last 3 months at making money. So we've got 2 modes listed. We're going to look at one called Vary the Start Date. We're going to look at another one called Sliding Window. All right, and so what I'm going to do is roll over to the Derby now and show you what all these words mean without you having to read through that and try to figure it out on your own. So I'm going to go back over to VectorVest, and I'm going to come to this tool here called the Derby. Before we get into the 2 modes of analysis, I want to talk quickly about what this Derby tool is, what it's showing you, why we built it, etc. Okay, so the single most question that Dr. Bart DeLito or myself ever had to field at an event is, you know, inevitably somebody will pull you over into a corner, you know, or catch you in the hallway. Hey, you know, come over here, and say something like, man, look, I know this platform's awesome, tremendous power, but look, what's the holy grail, man? You know, what's the strategy? What's the #1 technique? What's the best strategy to pick stocks right now? And of course, Dr. DeLito and I have always had a baker's dozen or so strategies that we feel are always kind of head and shoulders above the best, and they are. But the reality is, you want to know what's the best right now, you know, and try to know for certain. And so we built this tool. We call it the Derby because it's built in the spirit of a horse race. You see, we've always managed portfolios and shared portfolio performance with our subscribers for the last 20 plus years. And if you go back in the views and look, you'll see a lot of documentation around that subject and evidence of portfolios and things that have done really well. And the way that we've always gone about picking strategies when we're going to produce a portfolio for people to follow is we like to see what strategies are on the move and then pick stocks from those strategies. So we call it the Derby. It's built in the spirit of a horse race in that it tells you right now what the best strategy in the software is. In this case, because we're on today's Derby, for Friday. So Pirates Long on Friday was the strongest strategy in VectorVest. And if I click on the bar, I can then see the stocks that are in there. And my goodness, you had this one here. What was that? TIRX. You know, that's what I mean, though. I mean, how many people knew about that stock, right? It was up 39.78% when all was said and done. And you can see it probably made a couple of big jumps throughout the course of that day. You also have Workhorse Group. There's a stock that many of you probably are familiar with if you've been watching the stock markets at all over the last couple of years. You got eHang Holdings, which is another one that has made some dramatic moves, you know, but the idea here is if we could have jumped onto this strategy early in that day, you had a very high propensity to make money for the remainder of that day. And so we do a lot of cherry picking and things of that nature, just looking at this kind of information here and trying to pick a couple of stocks and make some money. When I was thinking about building a robust trading system, one of the things that strikes you when you look at this, you're probably thinking it right now, well, that's great, but one day doesn't mean that it's consistent. In other words, that doesn't mean I should just run Pirates Long tomorrow, you know, and expect the same kind of result. And I would agree with you. So one of the things that struck me is we hadn't spent a lot of time looking at the historical information because we archive all of this daily information for the last 3 months. And in that, there's more data actually than the entire 8,600 stocks that we track, over the course of time. It'd take me a while to explain why that is, but it's a lot of data, okay? And so we've got, I mentioned nearly 200 strategies in here, right? And then you've got results from one day to the next, 1 day to 2 days later, 1 to 3, and all kinds of different iterations of that kind of data parsing, okay? I need to get away from maybe these kinds of explanations now, because at the end of the day, I'm going to explain how we're going to leverage that data and the 2 ways that we're going to do it, okay? So I'm going to come over here to the left, and we're going to use something called vary the start date to kick off the conversations. Now, when I do that, one of the things that I'd already done this morning is I went back, and you have the 3 months of data that I mentioned. So I went back to January 19th, clicked the oldest date that I could, and then on the end date of the test bed, I clicked the most recent date that I could. That gives us 62 days worth of data in this case. Now there's holidays, and things. You're typically looking at more than 60 days. I've seen as many as I think 67, something like that. But that's far more relevant in terms of scientific approach than one data point, right? So you're looking at least 62 data points for every single search. So that's 62 times 200, and then we're ranking them out by what strategy has the best average performance over those 62 tests. So each one of these tests is just like the daily derby, except the first test is going to run the entire gamut of the last 3 months. So from 119 to 416, 10 stocks, 8 out of 10 went up, 21% return on investment, okay, or gain loss. That's the most important thing, because ultimately that's how we're going to be picking the numbers. We also do provide some max drawdown efficiency numbers, those kinds of things. But you'll see the next test went from 120 to 416, 121 to 416, 122 to 416, all the way down to the most recent time frame, which is just the morning, right? We're using market open, so the morning to the close. And this strategy was up 3.59%, okay? Now, that's a shorting strategy, actually. And we don't, in no way have I mentioned do we go short in this methodology, and we don't, and I'll explain maybe why later. I don't want to get into that mess now, okay? But it's very difficult to short in bull market situations with a lot of consistency. It just is. It's just something that you learn, over 20 years would be my case. So what we do is we can isolate just the bullish searches, okay? And when we do that, Gordon's Groupies now is at the top. And so when I click on Gordon's Groupies, I could then see the same kind of information, but it's been the most consistent search, buy and hold, from any day in the last 3 months to the current day. It's been the best search, the most consistent, average rate of return from any day in the last 3 months to the current day, okay? But that still left some questions for me in terms of, I don't know how many people saw it, but there are some rather large drawdown numbers and things like that in this result from time to time. So I wanted to do another test to make sure that we pick strategies that have a good opportunity to get off the ground for just the first week. Remember how earlier I mentioned the primary wave tends to only run about 9 to 10 days on average, somewhere in that neighborhood? Okay, so it's going to be incredibly important when we pick a strategy that it can make money in just that first week and get us going, because that exit of the campaign's coming pretty quick, typically, right? So, or it might have already happened, before you even get a week in, So what we're going to do is use this other analysis mode up here at the top called sliding window. And I would call this the acid test, actually. So, if there ever happens to be a tie or something, this is the one that we lean on, because now we're just holding for 5 days. Now, there's a lot of importance here, but the main thing I want to get across, that other statistical data set has a natural market bias in terms of direction. So, in other words, if over the 3 months that you're looking at, the stock market did nothing but go up, right, then it's going to favor situations where more of just a pure buy and hold strategy makes sense. But markets seldom do that, right? Markets typically have gyrations along the way. You know, they can go up and down several times before you get to the end of a 3-month period. So this takes that out of the equation. It takes market bias out of the equation by limiting it to just 5 days was what I was thinking, you know, when I put this together. Again, so for 2 reasons. It eliminates market bias in terms of direction, and it also would find strategies that do a really good job of making money in just that very first week. In fact, the best. So at the top of this list, we have a different strategy, right? Cheapos. Followed by Show Me the Money Long. And if I click on one, it'll show you the test bed. So you can see the first run, instead of running all the way to today, it just went from 119 to 225, right? But it was the most consistent strategy over that period of time. So having said all of this, I think my resolution's a little different here than what I was looking at earlier. But you want to find the strategy that's at the top of both lists, or the one that's the closest to being at the top of both lists. I want to find strategies that do a good job of buying and holding, but also get off the ground running the quickest in the first week. Okay? So if I go back to the prior one, you'll remember Gordon's Groupies was at the top here. Okay? So then if I go back to this one, so that's a score of 1. Gordon's Groupies for that list has a score of 1. Moneymaker would be a score of 2. Smooth Sailing would be a score of 3. Okay, very simple. I go to sliding window, I have to go down a bit, but we'll find it. Gordon's Groupies is right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You'd have to have another strategy in here with a score lower than 12. 1 plus 11 is 12. See what I mean? Otherwise, that's the most consistent, fastest runner. And I believe that that's the case. You know, just doing some quick analysis this morning. I might have messed that up. Now, we make sure we get that right, you know, when we make our decisions. I believe it is, but I did that pretty quickly this morning. Usually it's a lot more evident. And the other thing that we will do from time to time, depending on what kinds of strategies are coming in the top here, is on this most recent campaign, we actually did 10 and 250,000 minimums. So the stock prices had to be at least $10, and you had to have at least $250,000 average volume. That gives you a lot more liquidity. And we've got a lot of people following the strategy. We actually ended up with this one here that's at the very top. S&P 600 small cap divided by RT is exactly the one that we used. Here right now, it's still in number 1 position on the sliding window, which is the acid test. If I go back to the start date, I think it's fallen down this list at this point, okay? But it's still the very best one over the short term. And when we picked it, they were both running in the top 5 of both tests. You know, S&P 600 was at the top of both, pretty close to the top. And that's usually the case. In many cases, it is the top in both sides, you know, and that makes the selection as easy as it could be. But anyway, that's how we pick it. And there's no more magic to it. And we don't try to overthink it. You know, I realize that S&P 600 is a bottom fishing search, and it does the best in situations like last March when the market got creamed and, you know, the stock market is poised to take off. But look, we used it now because the Derby told us to, and we made 9% in just a couple of weeks. You know, so the Derby, it tells you things that you wouldn't even think of otherwise. In other words, if I was going to pick a strategy, I never would have picked S&P 600/RT. I would have picked it last March as a potential, you know, but I wouldn't have picked it now. And I think that's very telling. Yeah, I think the Derby is an incredibly smart tool. And, you know, it had Glenn and I kind of scratching our heads in the hallway when we were thinking about it. You know, like, Glenn's like, I don't want to go with the bottom fish. You know, I didn't really either, but the Derby said we should, you know, and so we did. And we're happy we did now, right? So that's what makes this thing so incredibly appealing to a lot of folks. I'm going to tell you a little bit more about a thing we call the Jockey Club. I'm sure there's lots of Jockey Club members in the chat right now. And it's a fantastic little trading community, that Glenn and I have put together. And we get together on a daily basis and we keep people abreast of this kind of information. We also look at cherry picking candidates. We just have a ball. It's interactive. Lots of folks, we look at their stocks, tell them what we see with them. But the main focus, well, it should be the trading system, okay? And because it's easy, picking stocks on graphs, while Dr. David Paul and Jerry and I, can make that look really easy, it's not. It just isn't, and it's like an art form. It's something that you got to work at, to get really good. And when you do get good, there's a lot of reward for taking your time to get up the learning curve and make that a reality. But this is something that anybody can do, and that's why at least I'm very fond of it. It takes, I've been trading for 20 years, so I can see things that a lot of people can't see, but that's just because I've been doing it for 20 years, So in this situation, you have to worry about that. See what I mean? Okay, so let me go back over here and let's kind of round third base, if you will. And I might finish a little bit early today, which is fine because we'll get the next presenter up and ready. Let's move into number 3. So this is the most challenging for anybody, right? When to sell. I say here at the top, your system determines your success. It absolutely does. And one of the pillars of any system is going to be knowing when to sell. So remember, we're going to use a 2-prong approach. The first line of defense when we're long a campaign is going to be profit locker. Now, profit locker is another term, just like a derby, that you're probably not very familiar with, and for good reason. Profit locker is proprietary to VectorVest. In fact, it's patent pending. And a new version of it, an even better version, is set to come out this year, which is going to blow everybody's mind, And I'm excited to transition that over into this situation if it works better than what we have. But I'm not going to blow this system up the way it is until I know the other one's better, But anyway, we use Profit Locker, and Profit Locker requires 2 inputs. It requires an input on a profit objective on a percentage basis that you're trying to achieve, and it looks at an initial stop loss, like an initial, if this trade does nothing but go down, when am I going to get out? And that would be the 7, on the screen. The target, that's what you're trying to achieve, is 28. So we use that combination. We did start with 21. I did a bunch of testing, and I was kind of vacillating back and forth between 28 and 21 when I launched it because the results were incredibly close on paper. 21 was slightly better. I had a hunch 28, when we hit some better market surges would be the better selection here. But we launched with 21 because that empirically had given us the best result. Well, it wasn't too much longer, about 6 months later, we transitioned right to the 28 because the market hit some good run. We would have been far better off with 28. Now, for 2.5 years, we've traded that combination right there, okay? So every result that you saw here plus, and some of you might be saying, well, I didn't see the full 3 years on that chart. It's all documented on what we call VectorVest University. You can see the live trading results all along the way. We had an API issue. We had to switch it from one, brokerage account to another to try to keep the thing rolling. And by way of that, we lost, some of that. But it's fortunate for us. We like to tell people about what we're doing. It's all on. We've got the evidence. It's on VectorVest University. Okay. So that's it. That's our first line of defense, and our overarching line of defense. The most important line of defense, remember, was that primary wave down signal. So whichever happens first for every stock that we trade, whether it hits a 28 target, a 7 loss, or the primary wave turns down. So I guess it's a 3-prong attack in a sense, right? Now, the vast preponderance of trades actually stop out somewhere in between 28 and 7. . I'll show you that here in a second, okay? So let's get over there and look. So I'm going to go over to VectorVest. I'm going to go to a product we call RoboTrader. RoboTrader is not a requirement. It is nice to have. RoboTrader is a tool that allows us to hook through an API into a brokerage. Right now we have interactive brokers. We have, and you can see I've got some of them listed here, actual accounts that we trade. We've got Ally, Interactive Broker, TradeStation. And in Canada, we also have QuestTrade as a potential, okay? In the Ally account, you can see we've got several different things. I mentioned we like to do some cherry picking and things on the side. And then here is the swing trading with the Derby primary wave portfolio. And as I hopefully have already pointed out, the 94.72% return from October of 19 to now. That's when we made the API switch, okay? We can see we did pull back surprisingly a little bit on Friday by about 1%. And I think we were at 99, yeah, almost 99 just a couple days ago. Okay, so it's been bouncing around a good bit. It's done that along the way. And you can see we bounce around from time to time, but the surges is what keeps propelling us higher, right? Now, we talked about the profit locker. So what I'm going to do, listen, you can set what I'm about to show you, you can set it up into another place in the platform called Portfolios, where it can send you alerts. So this is a paid tool. You don't, and you don't have to do it. It's nice if you do RoboTrader. Okay, but you can, if you're somebody that just wants to kind of test the water out before you commit to something like that, you can do it in another part of the product called Portfolios. All the same settings I'm about to go through, you can put in there. I don't have time to show you both, okay? So here in Derby, I'm sorry, in RoboTrader, if I go up to the top, I want to show you the system, okay? So remember we said our timing model is primary wave, so you can plug that in. Thereby, whenever a timing signal generates, this tool will tell you that it's happened. So it'll tell you, hey, tomorrow you need to buy these 10 stocks. Or, hey, tomorrow we're going to close these 10 out. Okay, just based on timing alone. In an up situation, as I mentioned, we're long the S&P 600 small cap divided by RT, and we use the $10 price minimum and the 250,000 minimum average volume. So we actually had to take the existing search in VectorVest, tweak it just a bit, and then select it to make sure that we're getting the right stocks. Okay? From there, if I customize a little further here, you're going to see on our stop criteria, here's Profit Locker. Okay, so remember, we're using 28.7, right? 28 target, 7 loss. Now, this is a great little graphic, and it does make one assumption. So the black line, this is going to be the challenging part of the presentation. So, tie your shoelaces up a little bit, because here we go. Okay? The black line is stock price movement over time. Okay? The black line is stock price movement over time. As you can see from the chart, we make an assumption that it's moving up in a linear progression, because that's the only way that we can show you the integrity of the Profit Locker stop loss curve. I want you to notice a few things. Profit Locker, David Paul talked about this yesterday. Profit Locker Pro's first objective is to get you profitable. Okay? Profit Locker's first objective is to get you profitable. So there's an initial trail. Once profitability is achieved, we've essentially moved our stop loss up to that point, and we're going to hold it there for a little while as stock price keeps moving. And we're going to do that to allow some new volatility to creep in and not just submarine a great trade. The downfall of just like a 10% trailing stop is if some little bit of new volatility creeps in, it goes down 12% and then it goes up again, right? So we're doing everything we can here once we get profitable to stay profitable, but also allow for some volatility to creep in and not just knock us out. However, as stock price gets closer and closer to that target, look what's happening with Profit Locker Pro stop loss. It's aggressively floating higher more and more rapidly the closer we get to the target. Then when we get to the target, we don't stop out just if a stock hits 28%. We only stop out if it violates a very tight stop loss at that stage. So there's a tight trail at the end, which is 1% in this case. Okay. Now, we've taken 7 trades at more than 40%. And the main reason for that is those stocks continued to just go straight higher. In some cases, they gapped higher on a session. In some cases, they just kept on rolling all throughout a session, going higher and higher in price. So that's an interesting thing that is worth pointing out, is we don't just close a trade because it gets to the 28%, which might seem arbitrary to begin with. If it keeps running, we stay in that trade. Very few of them do, because we've done more than 600 trades in the last 3 years, and I said 7 of them went up 42%. See what I mean? But if they do, we'll let them go. We'll let them keep running. And Profit Locker will tell us when they have the slightest bit of weakness, and we'll knock it out. And the idea there is, some of you, well, why do you want to get rid of that one? I heard, let your winners run. My experience is with this, they run the hardest early, And so what we want to do is we want to get to that 28%, close it, and do it again. Get to the 28%, close it, do it again. Get to the 28%, close it, and do it again. Get to the 28%, close it, and do it again, right? Because when the stock market surges, lots of stocks are surging, So you want to try to take best advantage of that situation as you can. This is something that you can only do in an automated basis like this. If I was just looking at charts, I'd say, yeah, let that baby ride, give it some room. But if you've got a tool, right, where you can close that out, get in another one, do it again, that's a better choice, okay? So I'm going to go ahead and close this out, but that's the essence of the stop loss, and hopefully that gave you enough to know. Now, we can't talk about anything else because the formula is proprietary, but we can discuss it enough to give you an idea of what we're doing, okay? All right, so with that, that's the system. So that's how you get to 60% annualized rates of return over the last 3 years, not just this 94% since October. So it's been phenomenal. We think it's going to continue, and I don't care what the market does over the next year. We may not make 60%, but we're going to keep moving that needle 8 or 9 or hopefully some years 10, some years hopefully 12 months out of 12 months, and just keep on plowing and keep on moving. All right, so that's it, man. That's all she wrote. I'm going to go back over here really quick and just kind of round and slide into home. You're on your way to becoming a swing trading wizard, whether you realize it or not. The reality is it's super simple. Look, I've got complete documentation on this thing. So it's like a 12-page document, okay? But it actually goes click by click on how you can set this up for yourself in our software. It literally is like step A1, click on Derby tab. Step A2, change to vary the start date. Step A3, change the calendar to 3 months. Step A4, print out the list, that kind of thing. And it even goes through how to set the portfolio up in either Portfolios or RoboTrader, because the clicks are the same. And so a lot of people have found a lot of value in that documentation. And it literally just takes you by the hand and helps you plug it all in, okay? The other thing I would say is Glenn and I, anytime a new campaign is initiated, we take the time that morning to cover all of this ground on a webcast for you folks so you can make sure that you're doing it right. And every single day we check in on the portfolio, show you how it's doing, showing you what 10 stocks we're in, showing you which ones are up, which ones are down, how much, what the charts look like, all those kinds of things. Now, I haven't spent a lot of time talking about what we call the Jockey Club. That's one piece of it. We meet every day in the Jockey Club from 9 a.m. to 10:30. And so we get together about a half hour before the market opens every single day so that we can coach you guys up on preparing for things like the swing trading system and what's happening with that on a current basis. But also, what is the market looking like that day? Is today a good day to be thinking about buying stocks or selling stocks short, based on what we see? So for example, I haven't talked about this at all. I would be remiss if I didn't. We have something called a Derby timing indicator. This looks at intraday market action, okay? So minute by minute market action, and it produces two bars. One's bullish, one's bearish. And they move throughout the day. Okay, let me come over here. Actually, I can barely see it. I guess it is on there. Down here at the bottom, you can kind of see how those bars were reading throughout the day on Friday. In fact, early on, it was extraordinarily bearish. So if I wasn't even in the jockey, neither one of us were. We were teaching here. But if I was in the Jockey Club that morning, I'd have said, pre-market, we're looking a little bearish here pre-market. Derby timing indicators saying market's bearish. And then for the first, looks like about hour or so, or at least half hour, we would have remained very cautious on the market. As the market started to rally up, hit some higher highs and some higher lows, we can see this indicator coming up, and as it started to cross above 1, we might have to get a little bit more bullish on the market at that point. And some days are better than others. Everybody wants to do something every single day. That's another problem that we've got to try to address with folks in this club. Is there are some days where it's just not worth going to battle, and that would have been the main message here, because predominantly the market's been doing fine over the last couple of weeks anyway. We're coming up but this wasn't a day to go to battle, Now the swing trading system, it's still going to battle because that's a proven methodology that can work through this no problem. But trying to go out there and buy stocks on your own without some kind of proven technique, that's not necessarily, this wouldn't have been the best day to do that. Okay, now there probably were some better ones if you go back, like this day here. See this? Look at this thing shooting up. This would have been a great day. We would have been coaching people to buy stocks for sure on April the 14th. Okay? All right, so that's just a little bit more about the club. Hopefully you're interested. Your four main instructors would be myself, Glenn Tompkins, Jerry D'Ambrosio, who'll be talking a little bit later today, and Patrick France, who actually talked yesterday. Glenn and I are on there the most. Probably 90% of the time it's either Glenn or I. But Jerry or Patrick, you're in great shape no matter who it is. I mean, really good instructors. Best we have here, on premises. So, well, Jim is retirement. And if you want to know anything about retirement, that's your guy. But as far as trading, those four guys are really good anyway. So that's all I have to say about it, guys. Hopefully you're interested. If you're not, I'm not sure what's the matter with you, because it can produce those kind of results, for the next 3 years. That's the idea. Anyway, and I hope you are, and the place you can go to learn a little bit more about it, get registered, is VectorVest.com/thrive. Do we have that website anywhere, or do I need to bring it up, guys? Do I need to bring it up? All right, here it is right here. Looks like, yeah. So if you go to www.vectorvest.com/thrive, THRIVE, www.vectorvest.com/thrive, it'll take you to this website here. You say, yes, I want to try the VectorVest Premium and Derby for 30 days. I'm going to get full access to VectorVest Premium and the Derby, which is normally a $258 value, for $29. Folks, I'm about to go home and do a little yard work and smoke a cigar that's cost me more than 29 bucks. An hour and a half of coaching from some of VectorVest's top instructors for an entire month for less than $1 a day. That's a no-brainer. I mean, if you don't do this, you're telling me that I'm not, in my 20 years of experience and building a strategy that hands-off makes 60% a year, is not worth $1 a day? I'm just going to tell you, you're crazy. You're flat out crazy. Okay? And you have 30 days for less than $30 to prove me wrong. Bring it on. I've been telling people to prove me wrong for the last 3 years. Ain't been one person been able to do it yet. So I reckon you're not going to be the one either. And you need to do this, okay? If you want to make the best of 2021 and beyond, you need to do it. We'll see you there.